Good afternoon, guys. We're looking at gold, and it's been a bit of a roller coaster, hasn't it? It's been through 1764 down to 1760. It's tried the top side. We tried to get above and stay above 1806. As you can see, we failed. We couldn't close above the 23.6. So, what can't go up goes down. Where do we go from here? Well, if we look at gold on a little bit of a longer term chart, you need to see where we've come from. You remember this? This went on for years. I mean, seriously, if I squeeze you up back, you can see that this band just went on and on and on and on and on. And we broke out. We broke out in 2019. Okay, there it is. June 2019. So ever since then, we've been going up. Now, the thing with charts is this. You have to look at the longer term charts to decipher where we're going to go in the future. Is this whole move up here? Well, I suppose we could take it from there, really. This whole move up here, is this just a correction? And, you know, we're at the 50% fib. Could this be a triangle? Yes, it could. Okay, so you're looking at a descending triangle. Now, what this normally means is that the market should go in the direction of the previous trend, i.e. up. So if we can draw in this triangle, which I've tried to do here, obviously it's the triangle base is down at the 50% fib, but I am trying, you know, if I try and look at this objectively, you can see that where 1764, 1760 really does need to hold, because the problem with it is doubles hold, triples rarely do, as we see time and time again. So if we do take out 1760 this time, where's our next level of really good support? It's here, 1691. So you can see that, you know, within obviously that weekly chunk there, you've had a good, 9 weeks where it stayed quite static. I think nothing can be said about gold being static recently. It did stand a chance, I think, of going higher if we could have got back above that weekly trend line, but we couldn't. And because we couldn't, you've seen people dump gold. So let's go back to the daily chart, and you can see clearly that line here that it tried to break above. We are currently below all of the moving averages I look at. We are currently trading around 1780, which is the daily pivot point. We've been to lows of 1779 already, highs of 1805. So watch that 1800 area, because it is pivotal. Our 9-day moving average is at 1794. Our 21-day moving average is at 1815. So we've not even come close to that. If you look at where the trend line is, you can see for today it's above the 21-day moving average, and it's at 1827. Watch this. Okay, I like to say history repeats itself, but I also am an advocate of doubles hold, triples rarely do. Also, if you look at our stochastics, you can see them sloping lower. Ever since it made those highs here, we've been coming down. We've had our days when we've gone up, but by and large, we've gone down. Look at the way the stochastics are sloping. You can see that each peak, the stochastics has reflected the price. It hasn't gone above it, and we're poised to trade lower. We've got 42 below 44, which is the blue line below the red line. So the market is obviously expecting, when the state's open, to drive us lower. Let's just take a quick look at silver. Not a lot, not a big look at silver, more obviously for gold, but let's just take a look at silver. Now, I've been keeping my eyes on silver, and isn't moving. It's double topped at higher levels. Obviously you can see that just above the 30,000 area, and the one to the right, which was in August last year, below that level, below 30,000. So silver, not been doing much, been grinding higher, but nothing really to talk of. Does that look ready for a puke? It does. Okay, where can it puke to? Let's have a look and see where silver's puke area is. So we've got two levels. We've got this one here, which I'll scroll all the way out, that I use for my long-term charts. I'll put that on the weekly. Now my really long-term fib level comes in here, okay, and that's the 38.2. Now that's going back forever. That's when silver topped out in 2011, but you know me, I still like to put long-term stuff on. Now that's coming in at 26.20. Now under that you've got the first 23.6 of this year and last year's move to the highs. That's coming in at 25.79. So we need to look at those two areas there. If we break, then silver can come all the way back down to here, which is 23, give or take. With the topping pattern, which you can see clearly on that weekly chart, we're not holding out a lot of hope. Stochastics don't know what they're doing, they're just neutral. And the RSI, again, neutral. So we need to look really at silver a bit longer, you know, a way away. We don't really want to trade it at the moment. There's no reason to go in and do anything in silver, but we'll have a look and see what it does around 26.20, 25.79. So back to gold. I've showed you the weekly chart on gold. That just looks like a big triangle on the weekly charts. You need to take care. You really do, all right? Because this 2 days action here was the market not having a clue what direction it was going. Only today has it made its little mind up. Because when you open and close at the same level, you know what? It's not gonna be good. Okay, so please take care and trade this very carefully and get out of any shorts before 1764. You can always go back in this market for the next drop lower once we break and close below 1760. Good luck, I'll catch you all later.